What if I told you that some of the world's biggest investors, sovereign wealth funds, insurance giants, and top-tier institutions are quietly shifting their strategies and eyeing Bitcoin? While retail investors may be heading for the exit, the big players are moving in. Why now? What's really driving this sudden surge back toward $94,000? And what does this tell us about the future of Bitcoin in a world that's slowly stepping away from the US dollar? Stick around, because we're breaking it all down right here on BizNance Hub. Let's jump straight into the numbers. Bitcoin is climbing again, now brushing close to $94,000 after previously dipping as low as $76,000. That's a dramatic rebound, and it's raising eyebrows across the financial world. Joining the conversation is John D'Agostino, the head of strategy at Coinbase Institutional. According to him, the recent movement in Bitcoin isn't just another price swing. There's a bigger narrative unfolding. The core of that narrative, decoupling. Now, what does that mean exactly? In simple terms, it refers to how Bitcoin is behaving independently of traditional financial markets. During panic periods in the market, everything tends to move together, usually downward. But lately, Bitcoin seems to be bucking that trend, showing signs of independence. D'Agostino reminds us not to get too comfortable with short-term trends. Just because Bitcoin is decoupling now doesn't mean it always will. Correlation data can shift overnight, and the reasons behind it aren't always easy to repeat or predict. Still, when he made a few calls across the crypto space, a clear pattern emerged. Institutional investors are stepping in, big time. These aren't your average crypto traders. These are sovereign wealth funds and long-duration capital pools who think in decades, not days. And they're entering the Bitcoin market for three main reasons. Reason 1, de-dollarization. First reason is this growing trend of de-dollarization. After the US announced new tariffs on April 2nd, concerns about global trade began to rise. If global trade slows, and much of that trade happens in US dollars, it could reduce demand for the dollar itself. That's a big deal. Many of these institutional investors typically buy Bitcoin in their own currencies and only convert to dollars when necessary. But if the dollar is weakening, why convert at all? Instead, they're choosing to hold more Bitcoin directly. That's a strategic shift, and it reflects a new way of thinking about Bitcoin as a hedge against dollar volatility. Reason 2, Bitcoin is breaking away from tech. For a while, Bitcoin was trading like a tech stock, moving in tandem with companies like Nvidia and Apple. That's largely because retail investors were shifting profits from their tech holdings into crypto. When those tech stocks dipped, Bitcoin followed. But that's changing. In April, gold ETFs saw massive inflows, around $8.5 billion. Meanwhile, Bitcoin ETFs experienced net outflows of nearly $470 million. So while everyday investors were pulling back, big institutions were loading up. In fact, Bitcoin outperformed gold in April, rising 13% compared to gold's 10.5%. It's a shift that shows Bitcoin is finally being viewed for what it truly is. Not a tech stock, but a scarce, decentralized, and portable asset with properties that resemble digital gold. Reason 3, the missed gold rally. The final and maybe most fascinating insight came from traders who told D'Agostino that many investors feel like they missed the gold rally. And now they're asking, what other assets offer similar protection during global uncertainty? Their answer, Bitcoin. Bitcoin has some clear advantages over traditional assets. It's portable. You can move it instantly across borders. It's immutable. Once verified, it can't be altered. It's non-sovereign. It doesn't belong to any one country. And it's scarce. Its supply is fixed and mining gets harder over time. When you combine all of that, Bitcoin becomes one of the few assets that consistently ranks in the top 5 inflation hedges, according to top commodity traders who've been building diversified inflation protection portfolios for years. It may not be perfect, but in a basket of assets designed to protect against inflation and instability, Bitcoin keeps showing up. So what does all this mean for the average investor? It means the game might be changing. While retail sentiment wavers and ETFs see outflows, institutional confidence in Bitcoin is growing stronger. Bitcoin is being recognized not just as a speculative asset, but as a serious tool in the long-term wealth preservation toolkit. Whether you're a crypto skeptic or a blockchain believer, it's clear Bitcoin is carving out a new role in the global financial system. If you found this breakdown helpful, make sure to hit that like button, subscribe to BizNance Hub, and turn on notifications so you don't miss any of our deep dives into the latest financial trends and crypto updates.